Welcome to Save U.S. Taxes Legally. I want to teach as many U.S. investors, U.S. business owners, entrepreneurs, franchisee owners, professionals, tradespeople, anyone who's salespeople, and also uh, independent workers. Most people have never heard of this, so this is why I do this weekly meeting. So let's get into this. Let me share my screen. Now, the Spendthrift Trust is legal. It's in the IRS Tax Code 643B. It's going to save you in four very important ways. I'm only showing three right now. You're going to save federal and state income taxes year after year and leave a legacy. The Rockefellers Spendthrift Trust is called the office, and it's 7 generations old and has over 400 people under the same EIN or employee identification number. You're going to keep your information 100% private. This is on the federal level, and the Spendthrift Trust will not hold LLCs, S Corps, or C Corps because that's state level. Every 50 states, even 53 if you count Puerto Rico and Guam, do things differently. That's public information. Anyone can go online to the Secretary of State or the Corporation Commission and research LLCs, S Corps, or C Corps by your personal name or by your company's name. 40% of those companies get sued every year. You're playing Russian roulette. Number three, I can't stop you from being sued, but if someone tries to sue you, you're worth nothing. All your assets are in the trust, and the veil of the trust cannot be pierced unless you're doing something illegal. And I know my clients don't do things illegally, but so if someone tries to sue you, the only thing they can do is they'll hire an attorney. When the attorney finds out he or she will not be paid, everything goes away. And number four, it's not on here, but if you're 65 or older, you will no longer pay the IRMA surcharge on Parts B and D of Medicare. Now, the statistic just came out. It says that 3.5 million seniors pay this monthly premium because they've made too much money. We'll get into this in the presentation, so let's get this started. Now, this is the 2026 federal income taxes. Most people are unaware there's 4 ways to file your taxes and 7 different layers. The more you make, the more you pay. Now, just looking at this, the most expensive way is single. Then it's head of household. You're divorced with children 18 or younger in your household. Then married filing separately. And then the cheapest way is married filing jointly. Listen up, ladies and gentlemen. If you learn nothing else from this presentation, check out married filing separately. On January 1st of 2025, the IRS quietly changed married filing separately to be exactly the same as single, all the way up to the 35 percentile. If you're married, do yourselves a favor. And when we're looking at 24% tax bracket, instead of paying $105,701, you get your taxes start at $211,401, double the amount. So again, do nothing else. If you're married, please file jointly, and you'll say, thank you, Sally, for teaching me something new. Now, like I said, this is in IRS Tax Code 643B. It went into effect when our tax code went into effect in February of 1913. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys made sure they could save taxes. Now, if your financial advisor or your CPA says, ooh, the IRS wrote a memo, yes, they did, on August 9th of 2023. The IRS said, they do not like Tax Code 643B. They do not like the Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. Now, if someone tells you about this, ask them to give you the full memo. I'm going to put it in chat for you so you have it. Please read this. On the first page, it says this is not tax information. The IRS cannot change the tax code. Only Congress can. I don't have a crystal ball. I don't know if Congress is going to look at this, but too many presidents, too many senators, too many congresspeople, and too many people in their super PACs that give them all the money for their elections know about the Spendthrift Trust. As regular people, I'm trying to let you know about this. Now, these 5 elements are needed in every single Spendthrift Trust. Paul Benson, the gentleman who wrote the 5 trusts that I sell, made sure each one of his 5 trusts have these elements or else it won't work. Irrevocable. This goes from generation to generation to generation. You leave a legacy. Some people say, oh, it's hard to get things in and out of the trust when it's irrevocable. I personally have wholesaled 28 properties in my Beneficial Spendthrift Trust. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. 97% of the trusts sold every year are what my mom and dad had and what Susie Orman talks about on PBS television, the family trust or the living trust. There's nothing wrong with the family trust or the living trust. It's designed to avoid probate and then nothing else. It dissolves. When my parents started their trust, I'm going to laugh about it. It's called the Gibbon Family Trust, real original. When I wanted to start using it for my real estate, I was told by their financial advisor I could not because I was not a trustee. I was not a grantor of the trust. I was a beneficiary. Number 3, discretionary. I don't care who is the trustee or trustees, they can make the rules for all the beneficiaries from when they're alive and then also from the grave. There's no infighting, there's no contesting the will or anything like that. Number 4, non-grantor. This makes the trust 100% private. When you start the trust, you're going to have someone who will never be a beneficiary, who will never be a trustee, sign up to be your grantor or your settler. It's not a speed bump. You do need their social security number. They sign up to be the grantor, and then they sign themselves away. I have done this for several of my clients. It's no big deal. And number 5, the spendthrift. This has been in front of U.S. Courts all over. I have 2 pages of case law. If you need the case law, please put in chat and your email. Say email case law, your case law, and I will send it to you. This started. It started here in the United States in February of 1913, and if you have the right attorneys working on it, like I do, it's an amazing thing. Now, a little bit about Paul Benson. He was a Harvard law professor, and he wrote 5 trusts. The 2 we're going to talk about here are the Business Trust and the Beneficial Trust. There's also the Mineral Rights Trust. If you have oil rights, shale rights, or coal rights, I've only sold one of those. There's a charitable trust. Several of my clients have that because they're saving so much in taxes. And then there's a senior trust, which is a blind trust for the senior. Either they have dementia or they've had a stroke. If the person is of sound mind and body, I would not sell the senior trust because it's a blind trust for them. Somebody else is in charge of the money. Now, the business trust. This is an actual client. I met him at a BNI meeting. He's an accident attorney here in North Carolina. He told me he and his wife in 2025 made $275,000 and they're at 24% tax bracket. I showed him for all of 2026, he's going to save $51,196 in federal taxes. And here in North Carolina, we have 3.3% state income taxes for an additional $10,972. For the full year of 2026, he's going to save $62,168. Now, he didn't start this trust until June. So in June, he got to save $5,180. In July, he got to save $5,180. In June, July, August, he'll save $5,180, and so on. This money he's saving every single month is his and his wife's money. They can put it back into his law practice. They can pay off his mortgage. They can buy a new vehicle. They have 2 young children. I think one's in elementary school, one's in junior high school. They can set up college funds for them. They can go on a great family vacation. They can give to a charity, or they can save retirement, or they can do all of that at the same time. It's their decision what they do with that $5,180 they're saving every single month with the Business Spendthrift Trust. Now, I can only help 1099 income earners. Unfortunately, if you're a W-2 income earner, your taxes are taken out before you get your paycheck. Google says 35% of W-2 income earners have a side hustle. That was me in 2019. I was working full-time as a Medicare broker, and I actually wholesaled 7 bank-owned properties. So that's why I have the beneficial trust. Now, this is the first property I put into my beneficial trust. Uh, my true story, I became a real estate investor in late 2018 when my mom got sick 2,000 miles from home. They drove from Goodyear, Arizona, 25 miles west of Phoenix, all the way to Charlotte for my oldest nephew's wedding. She got septic in the blood. She was on a ventilator for 13 months, in the hospital for 15 months. My dad stayed with my older brother at his house and visited my mom every day in the hospital. So I thought it was a good thing in July of 2020. I bought this bank-owned reverse mortgage for $20,000. Woohoo! I bought for $20,000. It's going to go to auction for $50,000 without lifting a hammer. I knew if I made the $30,000 spread and my tax bracket went up to 24% tax bracket, I would have to pay $7,200 for on this in capital gains. I'm like, why would I want to do that? I had to hold on to this for 13 months because of COVID. It didn't go to auction until August 28th of 2021, but the final bid was $64,326. Woohoo! Without lifting a hammer, I got to make $44,326 pure profit. And because I did transfer it from my LLC into the Spendthrift Trust in September of 2020 when I started, I got to save $10,368 in capital gains I'll never have to pay back. Now, I'm not trying to crow here. I have wholesale 28 properties through this Beneficial Spendthrift Trust. I have a crypto bot between Ethereum and Bitcoin that I get paid a little bit every single day. I make about $60 a day. My friend Glenn does my options trading for me. That's capital gains. I have 12 notes where I'm the paper on the house. People pay me their mortgage. That's interest income taxes. And now I have 7 seller financing houses, also that's also interest income taxes, and 5 rentals, which are rental income taxes. And plus, because the trust is copyrighted, when I get paid on the trust, I don't have to pay royalties on it. It's an amazing thing. So with this trust, this is just showing you the different tax brackets. If you make $50,000 as an investor, again, I'm in different tax brackets. Or if you make $100,000 in investments, how much you would save per your tax bracket. So short-term capital gains are between 10% to 35%, depending on your tax bracket. I use my tax bracket at 24%. That's when my CPA called me on April 4th of 2000 to say my tax bracket went from 22% to 24%, and all of a sudden I owed $98,000 in taxes. It's COVID. Everything I was doing for real estate had shut down, and I only had $50,000 saved. Thank God I had used money to pay off my townhouse, and I got a HELOC on my paid-off townhouse to pay for to pay my taxes. So capital gains are when you wholesale, you fix and flip, you do auction houses, tax liens, you sell crypto, you do options trading, or you're a Forex investor. You'll stop paying interest income taxes, again, between 10% to 37%, depending on your tax bracket. It affects you if you're a passive investor, you're in mutual funds, you're in a REIT, you're doing subject to real estate, the Burr strategy. Like I have notes where I'm the paper on the house, people pay me their mortgage, creative financing, or seller financing, and also Forex investors. Yes, Forex investors, you're double taxed. You need the Beneficial Spendthrift Trust. Dividend income taxes, again, between 10% to 37%, depending on your tax bracket, affect you if you're in the stock market, you're a day trader, you're a futures trader, you're a commodities trader, or you're living on dividends. Rental income taxes. Yes, you can move a property with a depreciation schedule into the trust. Yes, you can move a property with cost averaging into the trust. Besides, when you do have a depreciation schedule, when you have the trust, you'll never have to pay back the depreciation on any of your real estate. It's an amazing thing. So again, if you have short-term rentals, like Airbnb or vacation rentals, maybe you have 3, 5, 10, 15, 20, 100 doors. Maybe you're in multifamily real estate, apartment real estate, commercial real estate, but you're doing Airbnb arbitrage. The one tax that's not on here is royalty income taxes. They're taxed a little bit less, between 10% to 35%, 7 different layers. But if you're an actor, an actress, a musician, an author, an artist, you have NFTs, you have copyrights, patents, or intellectual property, you won't pay any taxes on that. Robin Williams, the late great actor, had the Beneficial Spendthrift Trust. Now his 3 adult children pay no royalties on any of his great work. Now, I'm not trying to crow, but here's another one of my deals. It was a wholesale deal. I bought it for $7,000. This is kind of funny. I contacted a real estate agent who had sold several properties in the area. Very, very rural Vermont. Never do it again. She knew exactly what house we were talking about. She knew exactly what the kitchen looked like. It was a 1930s kitchen. She said, "What if I give you $100,000 for this deal?" I'm like, "Okay." I did a double close. She didn't know I bought it for $7,000. I made $93 off of this property. And because I did it through my Beneficial Spendthrift Trust at 24% tax bracket, I saved $22,320 on this one deal. Now, if we go back up here, I saved $10,368. And now down here, I saved $22,320. So I've saved over $33,000 on just 2 deals I'm showing you that I've done. Now, long-term capital gains are when are a year or more and are either 15 or 20% when you sell your business, sell an investment property, or a baseball card. People laugh about to me about that. But one of my clients that I helped move from their everyday home into assisted living, his son's baseball cards were up in the attic. Unfortunately, the son had passed away. All his baseball cards from the 1980s were still in the packets. We found 3 Ken Griffey Jr. rookie cards that were sold for $49,000 a piece. They were bought probably for a quarter a piece. He didn't have to pay capital gains on that. This is husband and wife. The wife had seen one of my videos. They had bought this apartment building for $1.5 million in 2012. They sold it. They actually sold it in 2023, but this is their tax. If they didn't have the trust for 2024 to do taxes for 2023, at 15%, they would save $570,000, $500,000, or at 20%, they would have to pay $760,000. Because they started this trust before they sold the apartment building, they didn't have to pay that money. It's their money, and they could put it back into other real estate. So they got the full $50,000, and no state income taxes either. They actually live in California, so California makes we charge it as state income taxes. Now, talking about different things, I helped a husband and wife who saved dividend income taxes, $72,000. I knew the husband was 70 and I knew the wife was 68, and I just happened to say, "How much are you paying in IRMA surcharges?" Husband had no idea what I was talking about. The wife said, "We're paying over $800 a piece." IRMA happens every October. The IRS goes back 2 years. So October 2026, they're going to look at 1040 tax returns of 2024. Their super computers are going to add everything together. How much you gain from Social Security, how much you gain from pensions, are you working, how much you gain from wages, did you do a 401k withdrawal, a SEP IRA withdrawal, do you have capital gains, do you have interest income taxes, dividend income taxes, rental income taxes, or royalty income taxes. The supercomputers add it all together. For 2026, the threshold, if you're single or divorced, is $109,000 or more, you pay the surcharge, or if you're married, $218,000 or more. Unfortunately, I don't have this chart for 2026 yet. This is still 2025 numbers. So both my couple who were saving them for IRMA surcharges, they were up here filing married. This is again a little bit old. It was $185 in 2025. They still have to pay that each, but they got to save over $600 a piece. So $1,200 a month doing that. Now, I know I went over this quite quickly, but if you are interested in setting up a 30-minute tax breakthrough session with me, it is www.thetrustisyou.com/scheduling. When you set up an appointment with me, I'll find out how you file your taxes, single, head of household, married filing separately, married filing jointly, and what state you live in. I'll take you out to NerdWallet, a free website, give you the formula for federal taxes, look up your state income taxes, and I'll send you an email with all the information. It's your timeline. If you would like a full presentation with a little bit more about it, I have a free class on the Great Discovery, www, my first name and my last name pushed together. When you do go out to the Great Discovery, you're going to register as a free learner, and then the class is called Save U.S. Taxes Legally. On the Great Discovery, you can change that presentation into 165 different languages. True story. Husband and wife whose first language is Korean. Watch the video on Great Discovery in Korean. They set up an appointment with me. They had their adult son who speaks English better than I do, but the father had all his tax information, and they had 3 laundromats in San Francisco, and we're going to help them save over $82,000 a year in taxes. You're going to get 3 articles from Forbes magazine. I did not write, so Forbes knows about this. And then there's also 2 pages of case law, so you can research this to your heart's content. My goal is to help as many investors, help as many, I'm in the wrong place, help as many U.S. investors, U.S. business owners, U.S. entrepreneurs, franchisee owners, professionals, dentists, anesthesiologists, doctors, people in trades, electricians, plumbers, salespeople. One of my first clients was a salesman in Chicago doing commercial lighting. Or if you're self-employed, you will stop paying federal and state income taxes legally. If you have more questions, please set up a free 30-minute tax breakthrough session with me, because this is the secret of the rich. I knew about this. I had read an article on the Rockefellers Spendthrift Trust called The Office. It took me 5 months of research to start working for the law firm that I work for now. Paul Benson was a Harvard law professor who wrote the 5 trusts. Because he was a brilliant person, not a single trust has ever been audited. His grandson and great-grandson now run the law firm, and when you become a client with the trust, they will send you a certification saying if you get questioned by the IRS, they will defend you free of charge. No brainer. It's happened once only. It was a beneficial trust. The senior IRS agent was questioning if dividend income taxes could be saved. He did go down to a law firm in Texas, spent 5 hours in the boardroom. He approved the trust, and then he went 2 weeks later, sent an unsolicited letter called the Myers letter back to the law firm. If you want a copy of that, again in chat, just put in a letter in your email, and I'll make sure you get that. He retired from the IRS after 27 years being a senior IRS agent and became an affiliate like I am. He's just retired from the law from being an affiliate earlier this year. He went back to everybody he spoke to at the IRS, either to audit them or to question them, and told them about the Spendthrift Trust. I wish I had his Rolodex and information, but I'm doing this to let people know how they can stop paying taxes legally. Thank you for watching my video. I hope you have a wonderful week. Take care.